Hello and welcome everybody, it's Stephen and I'm a popular investor on the eToro platform. As usual, if you could please like this video and subscribe to my channel, that would be very much appreciated. And you can also find out a bit more about me on my website, which is www.𝘃𝗶𝗱𝗲𝗀𝗀𝗀. So on today's video, we're going to be talking about things that happened in the market last week, and it was a very eventful week again. And we're also going to be talking a bit more about my portfolio as a whole. So just to start things off, last week was a difficult week in the stock market and in the crypto market. And I'll explain a little bit more. So last week, the major indices, such as the S&P 500 and the Nasdaq were both down. The S&P 500 was down about 1% overall for the week. Whereas the Nasdaq was down even more at about 1.9% for the week. And a lot of this was caused by inflation data that came out of the US, and in particular for some of the forecasts. So it was actually forecasted that inflation year-on-year basis has actually gone up 5.4%, which is a huge rise. And actually is also shown that there's been a core inflation rate of about 4.5%, which was mainly driven by the sales of second-hand cars and the increase in the inflation of second-hand cars. And also, we also saw some increases in food prices, as well as a shortage of chips for auto manufacturers, which has really kind of weighed heavily on the inflation narrative. Wednesday and Thursday, there was actually a speech by Jay Powell, and Jay Powell is the head of the Fed. And what he actually said again was that he feels that inflation is transitory, and that they expect it to go to a normaler level at some stage of time, and that it was expected that it was going to be higher than expected at this current time. So this transitory argument has a lot of people divided, including myself, because I guess there's two ways that we can consider this transitory argument. I think it's very unlikely to impossible that the prices of things that have already been increased are going to be rolled back, unless it's in a particular supply and demand environment, or an environment where there's a lot of high competition which causes people to reduce prices. I think that the things that have already been increased are very unlikely to be rolled back. However, I guess the second argument, really, whether it's transitory or not, is whether that the cost of goods and services are going to continue to go up in the same way that they've been going up over the last few months, or whether the inflation will start to slowly tail off as they introduce other measures such as tapering and eventually interest rate hikes. So that's something to look at. But what I think personally is that inflation is going to continue to rise for a period of time. And that's why I think that is very good to be in hard assets such as Bitcoin, gold, real estate, and some other things such as oil, which might react positively to higher inflation. So as we move on to the economic data in the US, it was a pretty mixed week overall. So the unemployment rate actually hit a pandemic era low, which obviously suggests that more and more service jobs are being created in the economy, which is generally a good sign for the economy in the US. However, manufacturing data was a little bit weaker than expected and didn't reach consensus estimates, which means that there could be a slight slowdown in the recovery, possibly because of the Delta variant and some other factors that could be in play as well. It's worth keeping an eye on. We talk about Europe now. It's also a very similar story to the US. So the week showed that most of the European indices were down, and most of this is to do with the surging Delta variant in the Corona-19 pandemic fight. So what's happening is in the UK, they actually agreed to continue with opening up the economy and removing the last lockdown restrictions in the forthcoming Monday, which has been labelled Freedom Day in the UK. However, this doesn't mean that the cases are going down in the UK, and actually they are continuing to go up. However, I do think that it's a race, a vaccination race, and actually the UK are actually making great strides to provide as many people as possible with vaccines, including the young now. So I think if more and more people are vaccinated, it should lead to kind of a level off, especially of what you call serious cases, so cases where people are hospitalized, because one of the things that governments are trying to avoid is overcrowding of hospitals. In a different country as well, such as France now, they also released some regulations this week which said that they were going to have different rules for people that were vaccinated and some that were not vaccinated. So in order to be able to access shops, theatres, cinemas, and really public areas in France, they're going to require that you prove that you have been vaccinated. And it seems to be working as well, because I heard that there's been a massive surge in booking of appointments for vaccinations since this has been put in place, because it is essentially restricting people's freedom. We also saw in Holland that they had implemented much more stricter work from home requirements, and also in Germany that they said that they were not ready to relieve some of the restrictions until they saw much more progress with the vaccination program. So really at the moment it's a race between the Delta variant and the cases picking up and the amount that citizens can be vaccinated. So it's going to be an interesting time. So let's talk about what's happening in Bitcoin and crypto now. So as you know, over the last 8 weeks or so, Bitcoin has been ranging from the $30,000 range to the $40,000 range. However, over the last few weeks, Bitcoin has been in the lower end of that range. And it actually started off the week at about 34,000 and has since dropped to about 31,500 roughly at the time of making this video. There are many reasons behind what has caused this drop over the last few months, and I've mentioned a lot of these before. So one of those reasons obviously was the ban on Chinese Bitcoin mining, which caused over 95% of miners to have to stop their equipment. A lot of those have since set up in other countries such as Kazakhstan and the US. However, it's taking quite a bit of time to move over some of those equipment, and some of that equipment has already been moved over to Kazakhstan. However, there are a few issues in the US around Chinese mining equipment, that it doesn't fit to the actual standards of the US. So many Chinese miners have had to order in new equipment which has a lead time. But since then, the difficulty adjustment, which is in the Bitcoin network, has actually dropped fairly significantly, which has encouraged more miners to go online in other geographical locations and mine Bitcoin. So overall, it's showing that there's a lot of resilience in the Bitcoin network, and actually we are starting to see the hash rate slowly rise again, but obviously not close to the levels of previously before China banned mining. So that's one thing. The other thing that I talked about pretty extensively is the Grayscale Trust. And the Grayscale Trust had a big inflow of funds into the Grayscale Fund in January last year, as Bitcoin price continued to surge and Elon Musk got on board with Tesla on buying Bitcoin. This actually caused a large premium in the GBTC price of shares, and actually forced Grayscale to put a lot of Bitcoin into their overall Grayscale Trust, and they were the biggest buyer of Bitcoin at the end of 2020 and 2021, even more so than MicroStrategy. So what's happened now is that there's a 6-month lockup period for GBTC shares, and there is going to be some redeeming of those GBTC shares around about this period of time. So I think July the 18th, which was yesterday, was the when the largest majority of GBTC shares were starting to be unlocked. But you must remember a couple of things. So one, it doesn't mean that they will be redeemed and that people will sell all these GBTC shares, because they're actually trading at a deficit. You see more and more people start to buy the actually underlying asset of Bitcoin as the price goes up. And as the price stays down and there is a discount in GBTC, more people are incentivized to buy GBT shares and less incentivized to sell their GBTC shares. So it's a very interesting dynamic. We're also going to see a lot of shorts being unwound, because this is a way that the traders play the GBTC premium by buying GBTC, but also shorting the underlying asset. So if they are to sell off some of their GBT shares, it's very likely that they will unwind some of their shorts as well. So I think it's going to be a little bit of a sticky period over the next kind of week or two. But what I am really starting to see is seller exhaustion. So as I've mentioned before, we're starting to see that transfer of Bitcoin from the kind of the weak speculators, people that got in at a very high price and got scared and sold and were never really in it for the long haul, to some experienced either traders or experienced hodlers who plan to see the value of Bitcoin in the long term. So this is a very positive thing as well. We're also starting to see an outflow of Bitcoin from the exchanges to people's private wallets as well, which also signifies that people plan to hold them for the long term as well. So this is really good. I mean, one of the main reasons why I'm still extremely bullish on Bitcoin is that it's taking a completely different course to what happened in the end of 2017, beginning of 2018, where the Bitcoin price peaked. And then what we saw then was we saw a massive drop-off of interest in the Bitcoin network overall. And the on-chain metrics showed that lack of interest in all things Bitcoin. But if we actually look at some of the on-chain metrics now, we're actually seeing a massive continued increase and interest in Bitcoin. And all the on-chain metrics are actually pointing to the fact that we're in an accumulation zone. And it's very likely over the next couple of months that the Bitcoin price will continue to rise. And I expect it to rise above all-time highs within the next couple of months. So this kind of presents us with an opportunity. So I don't really at the moment want to be selling off any of my Bitcoin in order to forsake some of our future growth, which I expect to be, really good, holding Bitcoin as our highest weightage asset in our portfolio. So I plan to keep that in our portfolio, but I also plan to manage some of the volatility that is ahead. I think with the economic backdrop at the moment, with a high increase in inflation, and really what's going overall in the economy, I expect this to be extremely bullish for Bitcoin. As we talk a little bit more about our portfolio in general, I understand that over the last couple of months it has been a sticky period, and I know some of you may have copied in a period where I was at my all-time highs or close to my all-time highs in portfolio value. As you know, obviously there was a drop-off in the crypto prices, which has had an effect on my portfolio. I think I've managed it pretty well, but there's still an impact on what's happened over my portfolio in the last couple of months. However, my year-to-date results are still really great, and actually more than I could have expected at the beginning of the year. And I think in periods like this, we need to show some patience. So, there may be some of you that have been holding for kind of 2 to 3 months, and it may seem like this is an eternity and it's a really long period of time. But this is actually quite a short period of time in the investing world. And all good investors actually go through some of these sticky periods because it depends on the way that your portfolio is actually set up. And I'm very confident that my portfolio is set up in a way that will prosper in the second half of 2021. I'm also, in my stock market investment positions, I also scaled back a little bit on my tech positions as the year progressed in 2021. It doesn't mean that I'm not overall bullish on tech, but I think some of the evaluations got a little bit out of proportion. And I have kept a good amount of tech stocks in our portfolio and the ones that I am most bullish on. But I've had a little bit of a rotation into not only value stocks, but also COVID recovery plays and stocks that actually also benefit from increased interest rates if that's the direction that the US starts to take. And I think that this will pay off in the long run. However, as there is some issues with the Delta variant and some other uncertainties in the economy, it's not necessarily that these will pay off straight away. But I think that they will make outsized returns if we stay patient with them and I keep adding to these positions. These are all stocks that I have very high conviction in, and I think that it will pay kind of dividends in the long run. So yeah, please be a little bit patient with those positions as well. I've also added 2 new stocks to my portfolio this week. So one of those is a company called 𝗃𝗶𝗃𝗀𝗃. And what they are is they're a catering company which are on the UK Stock Exchange, which really look after catering of large companies, industrial camps, provide lunches, cleaning services, and all those around maintenance and catering services all around the world. And obviously they were adversely affected by COVID-19 as more and more businesses were kind of shut down. We then saw a little bit of an increase in those prices as optimism around the reopening of the economy started to happen. But since the Delta variant, we've seen a significant fall in the price of 𝗃𝗃𝗃𝗃𝗃. And I think it is a very good company overall. And I've actually worked with them previously in other roles that I've had in companies. And I know quite a lot about their business. And I'm very confident that as the economy starts to grow again, and also as the vaccination program starts to take place, that they will continue to grow and it will be a really good company in our portfolio. And it's a really good opportunity at the moment as the price has gone down. So I will probably continue to add to that position slowly and make sure I get some really good entry positions on that. The other stock that I've also bought, and it's an area that I've wanted to add to our portfolio for a while, is Nel Hydrogen, which is a Norwegian stock, which is on the Norwegian Stock Exchange, which deals in the storage and production of hydrogen. And it's a company that I'm very bullish on, and it had a surge at the beginning of this year in the price, but has since subsequently come down a lot in price. And I think that this has multi-bagger potential. It's sized proportionally in our portfolio because obviously there is a slightly increased risk on this type of stock. But I think it's going to do really well for us towards the end of 2021. So it's one to be really patient with, but it's one to keep an eye on because I think it will perform really well. I think that's about all for this video, and I really appreciate your time and your patience. What I really want to do is continue to provide value to you. I consider this service not only for me looking after your funds and making your investments for you, which I understand is very important for me to make you a long-term profit, but I also want to give you access to me as an investor. So kind of also consider it like a subscription to understand more about my thoughts about why I'm buying in particular stocks, and completing really good and strong analyst reports for you, being able to tap in and ask me questions as an investor and help you on your overall journey. So I'm always willing to take recommendations from you as my copiers and my followers. So if there's anything you want, including charts or any other areas I can help you with, I'm always willing to assist you. So thank you very much for listening to this video, and as usual, have a great week ahead. Goodbye for now.